Hello and welcome to the first quarter of 2026 investment overview from San Diego Foundation. I'm Matt Fettig, Chief Investment Officer and Chief Financial Officer.
And I'm Colleen Smiley, Senior Director of Investments.
The first quarter of 26 was off to a very hot start. Markets were up in the month of January. Of course, we all know halfway through the month of February, tensions with Iran exploded, a war started, and that caused a major bottleneck in terms of commodities not being able to leave the region. We know the Middle East is a large producer of oil, natural gas, fertilizer, and with the Strait of Hormuz closed, that put a lot of pressure on the market, particularly in the month of March. The good news is the market did recover in April. The bad news is, as we sit here in the middle of May, the war efforts continue, the strait is still closed, and it's anybody's guess as to when it may reopen. We've had some slower economic growth here in the United States. Couple that with this supply shock on the commodity side, which could put us in potentially a stagflationary type of environment. Inflation prints have been on the higher side here the last couple months, and that makes it very difficult for the government or the Federal Reserve to navigate through this economic environment using stimulus when we're in this stagflationary environment. So with that economic backdrop, I'll turn it over to Colleen to talk a bit about how the portfolios are performing.
Great, thanks, Matt. The endowment portfolio returned negative 0.3% for the quarter, outperforming its benchmark by 0.6%. Diversification across international equities, private markets, and hedge funds helped cushion the impact of weakness in U.S. stocks, as Matt described. Over the past year, the endowment returned 13.7% net of fees. The strong trailing one-year performance was driven primarily by allocations to public equities and private markets. The long-term portfolio was flat for the quarter and outperformed its benchmark by 0.3%. Stronger contributions from international equities, real assets, and hedge funds helped offset weaker public equity markets. Over the trailing one-year period, the portfolio returned 16.6%. The main drivers of performance over that period were allocations to international equities and real assets. Turning to the medium-term portfolio, we see that it returned negative 0.1% for the quarter, in line with its benchmark. While fixed income markets were relatively stable, they provided less downside protection than usual during the quarter's equity volatility. Still, the portfolio delivered a solid 9.7% return over the last year, helped by stronger fixed income returns over that time period. The intermediate-term portfolio, which is fully invested in fixed income, produced a modest positive return of 0.1% and slightly outperformed its benchmark. Over the past year, the portfolio returned 5.2%, and as with the quarterly performance, the trailing one-year return benefited from a positive fixed income market. The short-term portfolio continued to benefit from higher interest rates, returning 0.9% during the quarter and 4% over the trailing year. Future performance will be impacted by the Federal Reserve's interest rate policy, which for now remains keeping rates stable. Finally, the sustainable endowment and non-endowment portfolios faced a more difficult environment due to their concentrated equity exposure, returning negative 4.8% for the quarter. While markets remain uncertain due to inflation concerns, energy prices, and ongoing geopolitical tensions, our investment approach continues to emphasize diversification, long-term discipline, and prudent risk management.
Well, thank you, Colleen, for your report. Numbers look very good. Appreciate it. We are in a period of volatility right now for the markets, and it is very hard to predict what will happen over the short term. The good news is we do construct these portfolios for the long term, and they're designed to withstand periods of volatility in the market, similar to what we're facing today. So thank you for joining.
If you have any questions, please feel free to visit sdfoundation.org/investments or contact your donor services manager. Thank you.